Hello and welcome to Star USA Training. Today is Tuesday, February 10th, and this is our second in a three-part series covering export compliance essentials. Whether you're joining us live or watching the recording back, we do appreciate you being here. It is oftentimes a bit of a fun ride when doing these multi-part series. A month in between left a lot of things to happen in the intervening months, and I have been slammed. I'm not sure about the rest of you all, but thank you all for being here, and I appreciate it. If you are attending live, we encourage you to introduce yourself in the chat. Some people are already doing so, and that's very appreciated. Let us know where you're joining from today. We also invite you to connect with Star USA on LinkedIn. We've seen a lot of benefit from connecting over the past year, and we like to keep that going forward. So feel free to share your LinkedIn profile in the chat if you'd like, or just follow us and we'll keep the conversation going there. This session is being recorded. After the webinar, we will upload the recording, slides, and any additional materials to our website. Those of you that weren't here for the first part, please feel free to check our website for that recording and the materials in there. I will refer back to that during the course of today's conversation, and there's a lot of good resources and information that you should have visibility on. So those will be available on our website. For those seeking continuing education credits, we will provide a CE code at the end of the webinar. This session qualifies for one CE credit for licensed customs brokers and those with CCS credentials for NCBFAA. Please be sure to save the code given at the end of this session if you're watching live. The code up on YouTube will be at the same time, but it will be a different code. So if you're watching back on YouTube, thank you for watching. But the code that you're going to get there is for the recorded session. The live session has its own. So those of you here live, make sure you write down what you see. We encourage you to stay engaged throughout today's session. If you have questions, please put them in the Q&A, and I will circle back to them either throughout the conversation or at the end when we get to questions. And then lastly, a quick disclaimer. While I am a licensed customs broker, today's discussion is informational only and should not be considered legal advice nor transaction of customs business on your behalf. If you or your company need additional assistance after the webinar, please feel free to reach out, and we'd be happy to work with you. And with that, let's get started with some quick background and introduction. My name is Michael D. Easton. I am the president and general manager of Star USA. I've been in the industry for over 22 years, and I'm a huge trade compliance nerd. Those of you that have had the opportunity to have conversations with me at conferences and such can attest to that fact. Star USA provides international trade and compliance consulting, advice, training, and services across the entire spectrum of international business. If it involves crossing borders, we've probably done it. We have some excellent programs for handling your tariff classifications, free trade programs, CTPAT compliance, and many others as well. And over the last year, we've seen a lot of disclosures and audits and country of origin determinations and rulings and HS classification. So that's been our world pretty aggressively for a long time. We just hit our 30-year anniversary like 2 weeks ago. So that was a big milestone for us as a business. And we're very happy to have you with us here today. If you would like to learn more about Star USA, you can visit us on the web at starusa.org, or you can send us an email to train@starusa.org. So last time we spoke a month ago, we identified 4 of the main agencies controlling exports. In particular, those were the foreign trade regulations administered by the U.S. Bureau of Census, part of the Department of Commerce. We also talked about the export administration regulations, which is administered by the Bureau of Industry and Security, also part of the Department of Commerce. We talked about the International Traffic in Arms regulations, ITAR, which is administered by the Directorate of Defense Trade Controls, the DDTC, which is part of the Department of State. And then lastly, we talked about the Office of Foreign Assets Control, which is part of the Department of Treasury and the sanctions embargoes programs that exist in their sphere. We covered a lot of keywords, a lot of terms, and a lot of information sources, including penalties and more on last month's session. So if you need a refresher, feel free to pull those slides. Feel free to look at some of those resources. I won't be hitting those keywords and terms as much today. Today, we're going to be focusing a lot more on how to work through your business with knowledge of those agencies, of those regulations, of those keywords and terms and sources of information. Also, I want to note that next month in March, we will be doing the third and final part in this series, where we'll have representatives from U.S. Commercial Services and with the Ohio Small Business Development Council on to talk about some of the export resources that exist for Ohio businesses and businesses around the country, free of charge or at nominal cost, paid for by your tax dollars. So hopefully that session will be very enlightening and will help you get really dug in on how to do export successfully for your business and for your market. As always, when talking about exports, I like to call attention to the fact that exporting is a privilege, not a right. Privileges come with responsibilities, and those responsibilities come with penalties. Those privileges can be revoked. As an exporter, you must be able to demonstrate compliance. When it comes to regulations and rules, you have to have that documentation in hand to demonstrate that you took the right actions and that you are have a defensible position when it comes to your export programs. It's important to know your role and recognize that there is a presumption of noncompliance. If the documents do not back up your version of events, then the administration is likely to take an adverse position against their findings or against you in their findings. So you need to keep and maintain records. Records is a broad term. It can apply to genuinely anything, including emails, including records of phone calls, including financial transactions, bank statements, as well as the export documents like a bill of lading or commercial invoice or an SLI, things like that, BIS 711 and whatnot. Okay, so today we're mostly talking about developing your export strategy. I hope I've left enough time to kind of discuss your situations when we get to the end, but we're going to be focusing today on some of the key considerations that you need to have when thinking about building your export strategy. Knowing your business and building a program that works requires knowledge of both your actual operations for your company, what you're trying to achieve, where your limitations are, and also how the rules affect you both directly and indirectly. Indirectly meaning how they affect you by proxy, how they affect your business partners like your freight forwarders, how they affect your customers, or if you are a freight forwarder, how the export regulations that you have to comply with are going to impact your exporter clients and the foreign recipients abroad. So some of the key considerations that we'll look at today include the program flow, a general kind of representation of how to move through building your export strategy and your export program. Talk through some situational awareness that I think it's important for everyone to have as they're setting out on this adventure, and some of the ways to plan for those eventualities and those considerations. Remember, with exports, you don't really get a pass. On imports, when it comes to something like a prior disclosure, you can protect yourself from penalty. On exports, there is no guaranteed protection of penalty. When there is a violation, it's up to the government's discretion how they're going to penalize you. There are mitigating factors and there are aggravating factors, and there are lists of those that can be reviewed that will exacerbate the types of penalties that you're facing, or alleviate some of those penalties that you might be facing. But there is no avoidance of penalty protection when it comes to exports. So this is just kind of a high-level representation of how I like to roughly strategize for building out a program, almost of any kind. Certainly applies to exports. But whenever I set out to get my arms around it, and I'm imagining that many of you in the audience today are facing similar challenges of trying to get your arms around what exporting means for your business type as an exporter, for your business type as a freight forwarder, for your business type as a consultant, or whatever the case may be. For me, I almost always have to start with understanding the actions and the activities that are going on today, knowing where the goods are moving, how they're getting there, what the regulatory environments in play are. Am I only worried about the foreign trade regulations, or do I need to factor in ITAR into the conversation? Do I need to look at the goods or just the customers? Kind of weigh all of those things by taking a look at what the current state activities are. That's going to provide me a lot of the landscape that I'm going to need in order to start to put together an actionable plan. It's important to note that while these are set up kind of in a progress-oriented way where you move from one box to the next, At no point are you done with any previous box. Uh, I often think that I'm done with assessing the current activity state. But then during the resource allocation or communication stages later on in the process, I find out new information about what activities are actually ongoing that nobody chose to share during the activity assessment phase. Or I've pulled documents and the documents are not in agreement with what the verbal component was. So there is absolutely a trust but verify component in that activity assessment. You will hear things or you will think that you understand things, and then as you go through the documentation, as you go through the actual motions of setting up a plan, you will find out new information. And the same is true of all of these steps here. You will find out new information that's going to adjust your position from where it was. Uh, but dealing with that new information is part of this process as well. But roughly, once I've got an idea of what activities are in play, my next objective is to assign a priority to what's going on, either by risk. Hey, we're selling to a certain part of the world that is particularly risky, or we have a certain segment of our product that is for military purposes or has a different category of control that we need to pay attention to, or we have a major gap in the way that one of our customer sales teams approaches the market segments out there. Or maybe we're having a hard time moving our goods into a particular market and we're not sure how to best reach that market. There are a lot of different potential gaps when putting together your plan, and you want to recognize what your weak points are, where your knowledge gaps are, any vulnerabilities in your supply chain or in your internal practices, and where you have either the greatest degree of exposure to penalty or additional risks, or you're not capitalizing on the opportunities that you think should exist for your business. And once you've got your priorities kind of established, start to put together plans to address those. In the action planning stage, we use things like objective trackers or task lists or Gantt charts. There are a lot of different tools, and this might be just me as a human being, but I've never found one tool to fit all. I have often used a myriad of different tools to communicate with the other stakeholders in the business or to help organize the actual priorities and set up the plan flow, or to just capture all of the different types of things that need to be done into the right buckets and create those priorities on a much higher level, and then work through the details case by case. I do prefer action planning based on risk. If there is a risk to the business, that tends to get top billing. If one of my clients is exporting a risky material or shipping to a risky area of the world, then I'm going to prioritize that ahead of we're not capitalizing on some of the markets that we think we should have better controls over. But action planning should be based on risk, prioritize resolutions, and develop action plans to correct those deficiencies and raise awareness. That's a key piece. Your action plan also needs to have an awareness sharing component. I've done RACI charts. I've done Six Sigma based project plans, a whole bunch of different versions. And there is no one size fits all. And then we get to the resource allocation phase. This is where it's important to identify and allocate the appropriate resources, and this is where your action planning is probably going to be revised most heavily. I think you should set your action plans without considerations for resource restraints or constraints. Knowing that you have resource constraints should not influence what you think needs to be done in your action planning phase. How you're going to use those resources to accomplish that action plan it comes forward in the resource allocation step. So action planning should be more or less agnostic of resource constraints. And then you have to go back and revise your action plan based on what resources are actually available to you and whether or not you can justify allocating those resources to accomplish that particular objective. If the objective is to prevent your business from being shut down because of potential violations, then yes, allocate those resources, whatever those need to be, because you cannot risk putting your business out of business because you didn't have the resources available. But at the same time, if it is, something that's lower on the priority totem pole where certain people are feeling that they're left out and you need to have more conversations. Well, maybe you don't allocate as much resourcing to that action. You can kind of address that through a monthly call or a quarterly call or something like that, or a newsletter, or get them onto webinars like this one to help share information about regulations. There are different ways to approach that given existing resource constraints, but it shouldn't impact what objectives you're setting. Once you've got your resources allocated, it's important to get people on board with what that plan is and how it's going to be accomplished. Communications and information sharing are absolutely essential and often get the least amount of direct effort and attention. Knowing who needs to know what information is its own challenge all by itself. And sometimes that makes it onto my action plan. Sometimes one of the first steps is get all of the right people together and have the right conversation that those people need to hear. That's step one in a lot of those plans that I put together. There's no version of exporting that is one person in the business is responsible and can do it by themselves. Exporting is a group effort. Somebody is selling the goods for export. Somebody is arranging for that order entry or for that shipment of the goods. Somebody is coordinating with the freight forwarders. Somebody's coordinating with the customer. And then somebody's doing the review or evaluation after the fact. Sometimes we try to put those all on one person's shoulders, but it is I've never seen it be successful. Maybe if you have one export a year, that can work, but in most businesses, that's just not viable. So you need to have the right kinds of conversations with the right kinds of individuals to make sure that everybody understands what their role in that transaction is or what regulation they need to pay attention to. Not everyone needs to know every regulation. I know I cover a bunch of information when I do my regulatory focused sessions, much like the last one, and there is a ton of information. Somebody has to sift through that and sort out who needs to know which piece and how is it going to affect their day, and then how are they going to communicate back to the other stakeholders what issues may need to be addressed. Once you've got kind of all of those responsibilities distributed throughout the different teams and the impacted parties, it's important to set up a monitor and review process. As we'll talk about later, change is inevitable. Every business undergoes some sort of change. Maybe you've developed a new product line and it has a different set of concerns or considerations that need to be brought to bear, or you need to redetermine ECCN classifications. Maybe there's been a regulatory change and the environment that you're selling into is different than the environment that was created when the initial program was set up. Maybe the person who did all this work before is left the company and nobody knows what's supposed to happen from here on out. Maybe you've changed your forwarder. There are a lot of different factors that are going to require monitoring and reviewing. Maybe somebody just forgot to follow the steps. That's another key one that happens all the time. Oh, I just forgot to do that. Nobody was checking, so it kind of slipped. It's a very common sentiment. I love data as a tried and true nerd. So it's important to me to have reports and a narrative assessment. So if I've got a report, I need some sort of acknowledgement that we understand what that data, the underlying data is saying, that narrative assessment. And then from there, I like to establish a KPI to evaluate progress. KPI stands for Key Performance Indicator. It's a project management term. It's been around for ages, but I often find that a lot of my clients will ask me what the right KPIs, what the right KPIs are for exporting. And the answer is it depends, as with all things. Certain actions or certain types of goods or certain market segments are going to have different performance indicators that you're trying to meet depending on the circumstances of your business. That's where understanding the ongoing activity from the very first step is essential to being able to establish useful KPIs. I can't tell you how many times people just want to have a number on a report and then call that a KPI, but it doesn't actually indicate any key performance. It simply puts a number on a spreadsheet. You have to apply genuine analysis and understanding to those KPIs to develop something that is going to be meaningful to your business. If you're trying to increase your export sales by 18% in a certain market. Okay, that's a KPI, and there are going to be certain metrics that you're going to observe that are going to allow you to determine how you're going to meet that KPI. Maybe you need to have more on-site visits into that market. If you're selling into South America and you're not going to South America to meet new buyers, then you need to step up those plans. Maybe you have to work with U.S. Commercial Services or with the Ohio Export Assistance Network. I'm using Ohio because that's where I am. But there are export assistance networks and small business development councils in your areas that will help you find avenues to selling your goods into certain markets. In 2025, I can't remember, Commercial Services put on a South American kind of, I forget what to call it. Oh, Trade Winds. It was called a Trade Winds mission to South America, and they visited several countries, and they had international chambers of commerces and different industry groups represented in several different countries, and a bunch of U.S. businesses flew down there for a week or so of meeting with different buyers, prearranged, a very useful service for reaching the South American market. And it was pennies on the dollar for U.S. businesses to attend that sort of a trade mission. It's called Trade Winds. I don't know if there's any currently in the works, but perhaps we'll learn next month with the U.S. Commercial Services visit that we'll be having. And then lastly, you need to reassess. Again, in light of the changes that happen during the normal course of business, the standards are going to shift underneath your feet. And if you're not paying attention along the way, you are certainly going to have to readdress where your risk areas and concerns are. It may be that you have filled the gaps on the key risk areas that you had before, and now, because of Murphy's Law, error must go somewhere. There is a new gap that has manifested somewhere else in the organization that needs to be addressed. It is my experience that that is what always happens. Either that gap was there the whole time and nobody saw it because we're too focused on the bigger problem that got solved, and now that other problem is visible, or new questions got asked or new activities started going on. So reassessment, kind of repeating the whole process at some point, is intelligent. So here are some of the things that I would do. I can't really speak for what you should do without talking to you, but this is, generally speaking, how I begin these processes. I have the benefit of 20 years of regulatory experience, and I have this read, understand, and apply the rules to your business partly solved because I know the regs already, or at least a large portion of them. But it's important to recognize kind of where the regs fit into your business. So as a brief recap, the foreign trade regulations, the FTR, center on the facts of your export. Who, what, where, when, how, those kinds of questions are part of what the foreign trade regulations help regulate. They're sort of like, on the import side, we have the customs 7501, the entry form, entry summary. The foreign trade, or the electronic export information is sort of like the export equivalent of that, but not quite. Those of you in the industry will know that there are major differences between those things, but as a loose point of reference, the EEI is similar to an import except for export, or similar to an entry except for exports. And those facts have to be reported to the government. Then we have the EAR and the ITAR, which deal with protected classes of goods, services, and information. They have different layers of protection. They have different agencies of control, but by and large, they're dealing with certain categories of goods, services, and information. ITAR focusing on U.S. munitions list, on defense goods and services. EAR focusing more on the dual use goods, so the things that can be both commercial and defense related. And then lastly, we have OFAC dealing with the nature of the transactions and the movements of money to and through specific regions and individuals of concern. The sanctions and embargoes programs, the executive orders that come out of the White House that deal with certain regions, those are going to be more in the OFAC zone, and they are a little bit less rigid in nature, a little bit more tenuous in nature for applying those OFAC regulations to your business environment. A little bit less fixed in terms of how you go about doing it than maybe the EAR, ITAR, and FTR would be. Once I've got that understanding and application of the rules to the business environment, not every business needs to worry about the United States munitions list. So I don't So ITAR doesn't always get full focus when it comes to developing a program for a business, but knowing if ITAR applies is part of the process. Once we have all that, I try to create a profile of the business. What is the product base? What are the nature of the business transactions? What regions are we trading with? What partner networks do we have? Do we sell through distributors here in the US? Do we sell through distributors abroad? Do we buy through third parties here in the US? Do we buy through trading companies abroad? Knowing kind of how all of those pieces fit together and how a good gets from point A to point B to point C and finally to their ultimate destination. What are the export histories? What sort of practices have been in place historically, and what is going on today? I like to pull both ACE reports, which are absolutely essential to understanding what your regulatory exposure would be. Those ACE reports, which are reports that you can pull out of ACE, also through the automated export system that's inside of ACE now, to find your history of EEI filings that have been done under your EIN number, your export or your employee identification number, your tax ID. Those export histories from ACE will tell me exactly what the government sees for my business. I like to pair that with sales history and see if there are any gaps. If we have sold things for export where we were not the US PPI and the government does not have visibility on, that doesn't alleviate our responsibilities, particularly for the EAR and ITAR and OFAC, but it does reveal kind of a potential gap in how some of our export sales are not capturable through certain areas, and we still have liability for them, even if the government doesn't have the EEI filing with our name on it. Sales histories also help confirm that what was intended is what happened. Documentation and record keeping, assembling all the information, who's talking to whom, how are these transactions being set up, where in the process are they, that sort of thing. And then I move into evaluating, quantifying, and articulating some of the critical activities. Again, I take a regulatory first mindset because of who I am, because of what my background is, perhaps. There's no reason you can't start with a business first mentality, but this is what I would do. So I'm giving you my version of the events. One of the things I do initially is figure out which export transactions are routed and non-routed. It's also worth noting on the ACE reports, there are many export transactions that are exempt from EEI filing and therefore do not appear on the ACE reports. That's where the other sales histories and export histories come into play. You cannot rely simply on ACE. So I want to call attention that not everything is being captured on an EEI. Canada, below $2,500, Schedule B, that sort of thing. Knowing which transactions I have that are routed versus non-routed. I have a link towards the end here on how to know routed versus non-routed. I look for the consolidated screening list and restricted party screenings that have been done, records of those happening, when they happened, what they covered, what they didn't cover, what follow-up was done, if there were red flags identified, that sort of thing. Commerce Control List, CCL, and Export Control Classification Number, ECCN determinations, how those were arrived at, what was the analysis process, what ECCNs were looked at, which one was ultimately decided and why. That sort of information I like to have accounted for on a report or a worksheet of some kind. Same thing with the United States Munitions List and the ITAR categories, knowing that something is either directly on the USML or is part of the specially designed consideration of the USMLs, certain categories in there, or if it is released from that specially designed category and falls into the EAR, and if it is caught by the EAR at that point. Those sorts of things, kind of that chain of analysis that you go through to determine where a good falls on the export control spectrum. Checking ITAR first, and then the EAR, and lastly arriving at EAR 99. Knowing if there are any sanctions and embargoes in play for the different places that I'm selling to, or the different types of customers that I have, or any other factors that are ongoing, knowing what my business is and what those sanctions and embargoes actually are. Keeping tabs on all of the license requirements for all of my goods, whether or not we have the controls in place to manage those licenses properly and report on the usage of those licenses as goods get exported. And then lastly, the voluntary self-disclosure and penalty environment, knowing what the histories of those are, if there are any prior VSDs or if any disclosures might need to be worked through and what the potential penalties might be. And then lastly, I like to cultivate my resource and partner network, internal teams, making sure people internally are bought in and get what the challenge is, what the challenge of export regulations are, what the onus of responsibility is on businesses that are trying to export or trying to facilitate exports happening. Make sure people have at least a working knowledge and awareness of who to go to for questions or how to look for red flags or how to surface different things that might be relevant to their function in the business. They don't necessarily need to understand all the rules and regulations or the whys and wherefores, but they need to be informed that they have a responsibility and they need to be bought in. Same with brokers and forwarders, making sure that they are understanding my business. If it's a broker or a forwarder working for me or my clients, I want them to be understanding the nature of the business to the best that I can. By and large, brokers and forwarders know their job in and out. What they don't know is what your business is doing. And there's a certain responsibility that you have to ensure that they are aware of certain factors that might affect how they do their job. Uh, Ideally, in a perfect world, there is really good open communication and touch bases between service providers and exporters where everybody kind of knows what everybody's doing. I've never lived in that world. There always has to be direct effort applied to make those things happen from both sides, and it's important to be open to those conversations and adjust as needed. Consultants and other service providers that might be in the network or part of the export transactions, make sure that they have that full understanding, and then any government programs or federal agencies that might apply to your particular sets of goods. One of my magic powers, since I've been in this business, is that anytime I look at a document or a report, somehow, for some reason, my eyeballs just go straight to something that's wrong. Um, People don't love working with me because I have that superpower. I'm not trying to call anybody out, but for some reason, the first thing I look at is just why does this say this was shipped to Jordan? It certainly went to Colombia. So what's going on here? It's just the first thing I see. If you've got anybody in your organization with that same magic power, make friends with them because they will help keep you out of trouble. Hopefully they're not jerks about it, like some of us can be sometimes. I have a lot more words, but I'm going to keep moving. Okay, so from once I kind of have all those working pieces and people bought in, I like to create a plan by establishing a priority. And I start with actual or suspected violations. I treat both of them basically the same way. If I have a suspected violation, I need to determine if it's actual or not. So I would approach it more or less the same way. Violations have to be dealt with promptly. So you immediately cease any violating activities. If it's a suspected activity, confirm if it's violating before you cease it, but you might want to stop that practice as a abundance of precaution kind of a thing. Then you need to get comprehensive documentation. And I can't stress the word comprehensive enough here. Comprehensive means everything. It doesn't mean the standard set of documents. It doesn't mean just the commercial invoice or just the EEI. It means everything. If there were communications with, depending on what the nature of the violation is, if there were communications over email and circumstances changed during the course of a shipment, if a good was rerouted while it was in transit, there has to be a record of those sorts of events happening, either in communications or in documentation that is necessary for the goods to move. You have to get your hands on all of it, and don't stop just because you've gotten something. And then once you've gotten that something, you need to review it to make sure it is the thing that it's supposed to be. I find that very often where a document was obtained, but the document is invalid or incorrect or does not match other documents in the set, and that discrepancy is never resolved. Getting comprehensive documentation is an effort all by itself. And for the violation, you have to determine what the regulatory scope and framework is, including penalty exposure. In last month's session, we talked about the universes, penalties, and where some of those live in the regulatory universe, knowing if it's a foreign trade regulations violation versus an EAR or ITAR violation or Export Control Reform Act or one of those other categories, or if it's an OFAC, knowing what type of violation you're talking about so that you can quantify that penalty exposure. Raise awareness internally and get alignment with internal legal teams, internal executive teams, internal sales teams, uh, third parties that are involved in the transaction, customs brokers, freight forwarders, third parties, outside legal, that sort of thing. Prepare a voluntary self-disclosure if there's an actual violation. Implement any remedial actions to prevent recurrence, and then monitor and reevaluate those events. This is broad strokes, I know, but it's important to kind of hit all of those bullets because they all need due attention. My secondary priority after talking about violations are any licensable activities. This is if my goods are subject to potential licenses, I need to have full control over all of the ins and outs because a problem with a licensable shipment could lead to the business being shut down or subject to heavy fines or somebody going to jail if it's bad enough. So I want to make sure that I have control over all of the factors, especially regarding any licensable goods. So determining that regulatory scope, is it a license for ITAR? Is it a license for EAR? Is it some other license for a different agency? Raise that internal awareness and alignment, get external support as needed, establish clear and definitive processes for handling shipments similar to those that fall within that category of licensable. Establishing an empowered official. The empowered official is a term that is in the ITAR regulations primarily, but there's nothing saying that you cannot establish an empowered official for your business, even if you don't have ITAR goods or controls for your shipments. You can still establish an empowered official, and you should read through the link once you get the slides here to kind of see what the designation of responsibility, what the responsibility set of those rules say. Communicating with all involved parties about what their responsibilities are, what the consequences are, what sort of things are going to be happening, and make sure everything's documented. And then from there, it's just monitor and evaluate. Having licenses in your shop is not particularly problematic unless you're not exercising the appropriate degree of control. And that's where it does become problematic, because if you don't have the controls in place, then you're not going to be living up to the terms of the license, and the government is going to take issue with that. And then the last area of priority, which is in my experience, part of every single organization, is process improvement opportunities, especially communications. And this one is a pretty amorphous base, but it's important to continually refine and adapt your process to whatever changes are going on. Clarify and align regulatory responsibilities with business activities and objectives. Make sure that the people performing or participating in the export activities know which regulations apply and how to understand the pieces that affect their role. Quantify the scope of your activity, delineate the roles and responsibilities, create responsibility charts or action task lists or work instructions, things that will help reinforce the everyday attention that needs to be exercised. Make sure you have enough resources to accomplish those objectives. If your business is trying to grow your exports by 50%, what sort of administrative burden does that place on your trade compliance team or your logistics team or your customer service teams? What additional training are they going to have? What sort of credentials would you expect people to have and bring forward for those sorts of things? Growing your business is something that every business wants to do, and generally every business wants to do it without spending more money. But part of being successful when it comes to exporting is properly measuring and assessing what the impact of those exports are going to be for your business, both in terms of hopefully dollar increases, revenue increases, but also in terms of expenses, because it's usually not a one-to-one. And it's not particularly problematic to have a different export price than your domestic sales price. There are different things that are involved. Different resources need to be brought to bear, and making sure that you've quantified those resources and are building those into your price is essential to having your goods costed appropriately and being able to be sold in certain markets at the right price points. FTAs come into consideration here too, but that's a conversation for another day. Make sure you're empowering through appropriate education, training, communication, and routinely audit and evaluate. Typically for small importer or for small exporters, semi-annual or annual audits, internal audits should be sufficient. When I say, relatively small, I'm talking between 20 and 100 exports shipments a year. If you start to get more than that, it becomes important to do quarterly checks so that you don't have a pattern of activity growing without your attention or awareness of that pattern developing. So I would lean towards quarterly evaluations or internal audits or whatever you want to call them. And then if you have a high volume, you may have to do monthly or weekly. If you're shipping 2,500, 5,000 shipments a year, that usually qualifies for high volume. Every business is different. Higher risk might increase the frequency of audit as well. And then succession plans, which we'll talk about on the next slide, and the slide after as well. Change is inevitable. I've already said it a couple times on here, but these are the types of changes that I see most commonly in this arena that we're dealing with. We have new fact patterns that we need to adapt to, new regulations, new policy updates, new rules and guidance coming out of the administration, new court cases, things like that. The facts are going to change over time. They do not stay fixed. In 2018, we had the Export Control Reform Act, and we shifted a lot of things between ITAR and the EAR. And that was a significant overhaul of export control regulations. We've had new rules come out since then. We've got the BIS 50% ownership rule coming out in November, previously instated last year, coming out and suspended for a year and coming out this November. We've got new initiatives going on at different agencies, prioritizing attention to export regulations. We've got the sanctions and embargoes on Russia. There's a whole bunch of other factors that change in the world around us. And those facts and factors need to be brought to bear and folded into the existing plans. New humans. This is one that I think people tend to take for granted unless you've been the new human. It is difficult to recognize how much people just know in their heads and carry with them. So you're going to have new humans internally, a new hire or a replacement for a person that used to do all the work. You have new humans at your broker and forwarder. You may have just explained to your key contact at the forwarder how you like your shipments to be done. And then that person left and there's a new person handling your shipments. Maybe there's notes that the forwarder has taken and kept on your file for you, but maybe not. And those notes may or may not cover the information the way that you want it to be handled. So taking account for those new humans. Your customer base might change. You may have been selling to one customer for 50 years and never had a problem, but all of a sudden there's a problem because a new human has stepped into the role on the buy side over there. Or they may have been sold under a mergers and acquisition to another company, and they have different policies and procedures that need to be put into play. So just factoring all of those things in. M&A, mergers and acquisition, a lot of equity companies buying up businesses right now and shifting around responsibilities and who does what and how. New products, new product lines. Don't take for granted just because you've always been selling a blue pen and never had any problems. Well, when you add a laser pointer or laser sights on that pen, it might change some of the rules. Or if your pen can now shoot bullets, it's not a pen anymore, making sure that you're aware of how that's going to impact your export regulatory responsibilities. New items being purchased, new raw materials, or different rules being put in on how you access or get those raw materials and how that's going to affect your export market. New tools, new systems, new technology, new methods and practices. Again, another constant. Some people still work on the same systems they had 20 years ago. A lot of companies have undergone some sort of system transition in the last 5 to 10 years, and that will continue to be the case. AI is influencing decision-making at the executive level pretty aggressively. What does that do to your tool chain? Making sure that you're aware of those sorts of things. And then how do you handle that change? First of all is self-awareness, acknowledging your own limitations and your blind spots. I have a bias against AI. I'm cognizant of that bias, and I need to make sure that just because I have a bias against it doesn't mean that I throw the baby out with the bathwater or ignore the potential benefits that might be brought to bear. I'm certainly a risk-oriented person, so I'm focusing on the problems those sorts of things will create, things like AI and trusting machines. But that does not mean that I should ignore the benefits that those things might bring to bear. Situational awareness. Make it a point to observe and review prior assumptions and understanding. I need to move faster on my time here. So situational awareness, just paying attention. Shared awareness, making sure you're talking and proactively seeking information and sharing information out as well. It's not enough to just go seek information. You need to be sharing information with the right people. And then assess the impact of these changes. Is your forwarder changing the person that handles your account that big of a deal? Maybe, maybe not. But you need to quantify that. You need to have an assessment of what that's actually going to mean for you. Be very different than changing the person at your own organization who did all this work to somebody who's brand new. Which brings me to succession planning. This is the process of identifying and developing employees to fill key roles in organizations when leaders leave or change roles. Succession planning is part of a growth mindset. You should be assuming that one day your position is going to change. Assume also that one day the positions and responsibilities of those around you will change, and you should be planning for their succession as well. If there's a certain individual that just every time they set up an export sale, they cover all their bases perfectly, write down what they did that was good, and then help share that with the other teams or with the person that steps in after them. People don't stay in the same job for long periods of time. And certainly I'm seeing that people are staying in the same job for shorter and shorter periods of time. Of all the types of change that occur, personnel is far and away the most impactful to ongoing success. We have not yet been replaced by robots, and I don't see that happening anytime soon. So it's important to be able to work with other people and adapt to the human aspect of your business. Clarify objectives, make sure you're all bought in on the right things, be specific, tie in regulatory risk, business incentives, and then frankly, sanity improving projects and goals. There's never enough sanity to go around. Document successful efforts between your policies, your procedures, your work instructions. I find work instructions to be the most impactful. A lot of times policies are neat to have and they're good to have available for backfilling some information gaps or for presenting to executive teams that love that stuff. But work instructions, man, that's where it's at. Here's how you get to this information. Here's what you need to access. And then continually updating those work instructions as facts change. If there's a new type of shipment, create a new work instruction for that new type of shipment that has different practices. If there's a way that works, make sure you write that one down. If you have work instructions that don't work, or if you have practices that you're following that don't work, don't write those down. Don't make those your practices because nobody will use those work instructions. So be keen to that sort of information. And then make sure you're stating your incomplete projects, particularly when you're preparing for your own succession. If you're going to be leaving a job in a year, or you know that this particular position has a lot of change and turnover, make sure that you're capturing projects that are in process or are incomplete so that they can be picked up or reevaluated as time goes on. Okay, we'll wrap the general discussion of export program preparation there. I want to call attention to several webinars that deal with similar and related facts. We have the EEI filings, when, who, and how is responsible. Close enough. What the CCL, talking about the Commerce Control List, and EAR, ECCN, and licensing. All of those are recent history. And when you get the slides on the YouTube, you'll be able to click through to those links. There is a webinar happening this Thursday, February 12th at 9:30 a.m. over Zoom. It is being put on by the Ohio Apex Accelerator Program and the Ohio Export Assistance Network. From the Export Assistance Network will be Nate Ward, I believe, who is also joining us next month. So this is his webinar. It's a part 2 on protecting your business in a global marketplace, and they're focusing on the fundamentals of cybersecurity and export control, ITAR. And again, that's Thursday at 9:30 a.m. Eastern. You can register at the link here. The link is on the screen there in words in case you want to look at that now. And we'll get the slides out probably tomorrow. But in case you wanted to write it down now or take a quick screen grab, that's on there. The first part was on getting started in government contracting and foreign trade. And that part is available on YouTube, which you can click through to once you get these slides. And we're going to go to the next slide here. On March 27th, Star USA and MTA Lines and Star USA are putting on a seminar in Olmsted Township, talking about tariff turbulence, free trade agreements that drive growth, smarter supply chain with AI and automation. Navigating the 2026 global trade and logistics landscape, we will have guest speaker Pete Mento. Pete Mento was mentioned on one of the prior webinars from last year, talking about resources in the industry that share good information or good places to get information. So Pete Mento will be the keynote speaker of that event. Registration opens soon. Again, March 27th from 8:30 a.m. to 4:30 p.m. in Olmsted Township. So if you're in the area, please keep an eye out for that event. And we will send links out once we have all of that stuff ready to go. And then lastly, our Elevate Summit for Women in International Trade is scheduling for fall 2026 in Columbus, Ohio. So we're still coordinating the venue, but I want to give everyone an update on that event. And as we get more information, obviously we will share it with everyone. Okay, thank you for joining us today. Here's the link to register for next month's webinar and the accreditation code for today's webinar. Please note that there are no O's. It's only the letter 0. Oh my God. It's only the number 0 on that code. There are no letter O's in that number. You will also need to include the dashes when you save this code. If you're entering this for credit towards NCB FAA certification, please double check if you're entering it for the live webinar or the on-demand webinar. If you're attending live, that code is for the live webinar. If you're watching back on YouTube later, there will be a different code on this slide. So that one will be for the on-demand recorded version. Okay, we do have several questions here. I'm going to get through them. There were some that were submitted. Where are we at? 10:52. Okay. There were some that were submitted prior that I wanted to address here. Bridget W. in Ohio asks, is there any recommended screening software, or is searching the consolidated screening list, the CSL, and OFAC sufficient? So Bridget, that's an excellent question. She's asking if there are any recommended screening softwares. What I can't do or won't do, we can haggle over which one it is I'm not going to recommend a specific software on this webinar. But those of you in the chat, if you are using a particular software that you like for restricted party screening or denied party screening, whatever you want to call it, feel free to share that software in the chat now during this the remainder of the session here. Oh no, I moved some things. So yeah, if you have a particular software that you use for screening, go ahead and use that. Therese D asks, selling U.S. products to a foreign wholesaler, what are the responsibilities of the U.S. seller for EAR 99 goods? The answer is it can vary. But if no ITAR or EAR rules apply, then you're really focusing on the general prohibitions, restricted party screening, and then basic foreign trade regulation rules, EEI filing, things of that nature. It depends a little bit on your relationship with the foreign wholesaler and what their role is and what you've told them about your goods and what your expectations are about who they can and can't sell to, because you do still have some responsibility for U.S. goods wherever located, making sure that you have that information shared with your foreign wholesaler about what their restrictions might be. So just because the goods are EAR 99 doesn't mean that you're completely hands off. It would be neat if it were that simple, but there are a lot of considerations and a lot of U.S. interests at play, even if you're relinquishing control over the goods at a certain point in their export journey. Eventually, they're going to make it to a certain part of the world, and there are going to be certain people that are buying those things. If they are buying U.S. goods, that could be problematic. So screening fits in. You have a right to ask your foreign wholesaler who their customers are, and they don't have a responsibility to share it with you, but you need to know what you're going to do about that. Maureen asked, what if your ultimate consignee is a vessel and thus has no permanent address? And Maureen, I have no idea. The first thing I would do is I would call Census probably, or U.S. Commercial Services to find somebody who can help me find an answer to that question. So yeah, I would start by picking up the phone. There's not going to be anybody that knows that answer offhand or immediately, at least not in the first layer of communications. So I would start by picking up the phone and figuring out who to ask next. Ariana C. in Texas asks, who is required to file the EEI and how to determine who is the USPPI? What are the best practices for correcting EEI filings? That is a long and varied answer, but I would start you with the webinars that we've done recently here at Start USA. I'm going to scroll back to these. Nope, this one here. EEI filings, when, how, and who's responsible. That would be a good place to start to determine kind of what responsibilities, who has which responsibilities, and what sort of practices to put in place. And those are available on our website. You can find those in the on-demand webinars section of our website. Rhonda RT in Grand Rapids asked, what freight forwarder responsibilities in exports? What are the freight forwarder responsibilities in exports? And the answer to that is, if you're the agent, know on whose behalf you're working for and filing EEI. Is it a routed or non-routed transaction? Refer to that same webinar that I just mentioned to Ariana. You have to know who you're representing so that you can then follow the right set of responsibilities when working on behalf of that person, or follow the right set of actions to ensure that you get the right information from the right party. When you're the authorized agent, you're either working for the USPPI or the FPPI, and it can't be both. The USPPI in a routed transaction provides you with certain information, whereas in a non-routed transaction, the USPPI provides you basically all the information. So you have to kind of know what type of transaction it is, so you'll know what your responsibilities are. Posted today, we have the question from Anonymous. Regarding export transaction screening, relying on freight forwarder partners to perform this function is okay. I disagree with that. For export businesses, is this enough to satisfy compliance, or should the export entity have an in-house screening setup as well? Freight forwarders are insufficient for your export screening all by themselves. Number one, freight forwarders are not going to have visibility to all parties to the transaction. The people that are going to have that information are going to be sales or customer service people. The freight forwarder is only going to know potentially just who the ultimate consignee is. They may not know who the foreign buyer is because it's not required for the EEI filing. You do not need to record the foreign principal party interest on the EEI. Your freight forwarder is also screening to protect themselves, not you, unless you've given them more information or you're paying them separately to do the screenings for you. Your freight forwarder is not working on your behalf that way. They are covering their own bases. So making sure that you're discussing this with your freight forwarders. Hey, I understand that you guys do screening. Is that sufficient? What information do you need from me? Do I need to do something else besides just give you the commercial invoice? Like what are those expectations? Is the SLI going to cover all those bases? The answer is no. The SLI does not cover all of the screening bases that you need to cover. So for export businesses, you need to have your own restricted party screening practices in place. The regs don't say that you must screen. That's an important consideration here. The regulations say you may not sell to these prohibited parties. How you go about achieving that goal of not selling or shipping your goods to these restricted parties is up to you. One of the key vectors for that is restricted party screening. That provides you the documentation trail that you've at least checked and taken steps to prevent that from happening. I have lots of clients who have never broken that rule and have also never done restricted party screening. They have never sold to a restricted party, and they have never checked. But when I come in and do the checks, it proves out that there's no restrictions there. They don't have that much export volume. And so they had never broken the rule, even though they had never done restricted party screening. Jason asks, some of our products may need a license, EAR license, to export. We've applied through BIS, but are getting no feedback. One application was submitted in September, still zero response. Are other companies seeing similar delays and issues with BIS? We used to see feedback in 30 days. Any recommendations? Jason, I'll let other people in chat kind of give their own answers to that question. If you are seeing delays in EAR licensing, I'll give my answer to that, which is absolutely. There was a moratorium put on export licenses, I want to say in spring of 2025. That moratorium has been lifted, and they were processing backlog from that hold on all export licenses, or virtually all export licenses. There was no official advice coming from the government, but there was unofficial sources and anonymous sources telling people in the media that they had been instructed not to process licenses. So there was a big hullabaloo back then. So it is not surprising to me at all that licenses are still being delayed. I believe that they're undergoing a different set of scrutiny than what we're used to in the past. So if others are experiencing similar delays, please feel free to share that with Jason. Michael B asks, to integrate an FTZ and duty drawback program effectively, what specific enhancements do we need to make our export data integrity and retention policies? Oh, Michael, FTZ and duty drawback are both significant programs in their own right. I apologize, I'm looking over at the questions that are over here. They're significant programs in their own right that need their own due consideration. At bare minimum, you need to have, for both FTZ and duty drawback, you need to have complete traceability of the goods throughout their entire journey. That begins with typically arrival into the US and then their disposition in the US. For FTZs and for duty drawback, you can have different inventory control methods, first in, first out, last in, first out, a whole bunch of different things that are all part of the program that you have put before customs, and customs has agreed that that program is sufficient, those inventory control mechanisms. And if they're used in production or they're eventually shipped out or withdrawn from the warehouse, uh, all of those controls need to be in place. There are service providers, software providers that specialize in FTZs or that might specialize in drawback. I don't know if I specialize in drawback necessarily. There certainly are some that specialize in FTZs. The simple answer is you need robust documentation and inventory controls, and there should be no question when preparing your FTZ filings or your drawback filings of the disposition of the goods at any point in their journey or stay in the US. Additionally, for drawback, separate from FTZs, would be the EEI record, the AES records of the EEI, obtainable from freight forwarders for the export transactions that will help evidence the actual exportation of the goods in that chain of events. Also for drawback, there's a prior notice requirement. You can't just export your goods and then get the money back later. You get one shot at that. But after that, you need to have the notice of intent prior to export or destruction. So yeah, that's a much bigger answer than I can get to here, but that's hopefully something useful for you there. Anonymous asks, does Michael do consulting work? I'm interested in finding. Yes, yeah, I do consulting work. And feel free to reach out to us at hello@starusa.org or train@starusa.org, either one. And that was from Anonymous. Okay, I lost track of my chat somewhere in the controls here, but we're past time. I appreciate everyone for being here. Thank you so much. And I look forward to talking with you next week as we hear from Todd Heiser of U.S. Commercial Services Cleveland and Nate Ward of the Ohio Export Assistance Network. Talk soon. Thanks all.